Hello, what's up, yo? This is Sunko, the Korean bro. Today is 2022, December 8th. Let's take a look at economic calendar first. Okay. Hmm. Let's take a look at some of the most important things here. Hmm. Let's take a look at MarketBeat.com because it's been a long since I saw MarketBeat.com last time. So, hmm. Wall Street points to higher ahead of jobs and inflation data. Okay. Hmm. Are investors hearing the end of Shopify's downtrend? Asian shares slip after tech stocks slump on Wall Street. The question of a Fed pivot isn't if, it's when. Here's why. Top 10 surge stocks on market with all axis. 3 dividend kings would lurely good upside. Asian shares slip after tech stocks slump on Wall Street. World shares mixed ahead of US jobless inflation data. World shares mixed ahead of US jobless inflation data. Why you should avoid Carvana even if it avoids bankruptcy. Mm, okay, we have initial jobless claims today. On Thursday, December 8th. Okay. Let's take a look at this one first. Initial jobless claims measures the number of individuals who filed for unemployment insurance for the first time during the past week. This is the earliest US economic data, but the market impact varies from week to week. A higher than expected reading should be taken as negative bearish for USD. Uh, what do we have? We have 230k actual, and forecasted point was 230k as well, which is about the same. Hmm. Okay. How long does it take to become a profitable trader? Intel is a sleeping giant ready to awaken. Hmm. How to be persuasive with your body language. Can Zim defy bro downturn in the container shipping industry? Okay. Okay, let's see. Wall Street points higher ahead of jobs and inflation data. Wall Street pointed higher in pre-market trading Thursday ahead of employment and inflation data. They may offer hints about how aggressive the Federal Reserve's next move will be in battles against inflation. Futures for the Dow inched up 0.2% and the S&P 500 rose 0.3% before the bell. The U.S. releases data on weekly unemployment claims Thursday. The jobs market has been a strong area in an uneven economy, making it more difficult for the Fed to tame inflation. There are nearly 2 available jobs for every unemployed American, and the unemployment rate is historically low at 3.7%. Fed officials have said the unemployment rate will need to reach 4% to have a meaningful impact on rising prices. Let's read this one more time, okay? There are nearly 2 available jobs for every unemployed American, and the unemployment rate is historically low at 3.7%. Fed officials have said the unemployment rate will need to reach 4% to have a meaningful impact on rising prices. So for unemployment rate measurement be meaningful, uh, it's gonna be at least a 4% to have impact on inflation data. That's what it is. Okay. On Friday, the U.S. releases data on wholesale prices that will provide more details on how inflation is affecting business and consumers. There has been some evidence that inflation has eased the past few months, but not nearly enough for the Fed to dramatically change its aggressive course of rate hikes. Hmm. Okay, there are some definitely evidence that inflation has eased the past few months, but hmm, it's not enough. Oh, okay, it's not enough. Hmm, okay. The U.S. releases data on wholesale prices that will provide more details on how inflation is affecting business and consumers. Okay. The Fed has raised its benchmark interest rate 6 times since March. Okay, they've been continuously raising interest rates 6 times in a row uh, since March. With its key rate now in range of a 3.75% to 4%, the highest in 15 years. Most observers expect the Fed to raise its rate by another half point when it meets next week, which would be slightly lighter touch than its last four increases of 3/4 of a point. Okay, so next we'll have another interest rate hike, but then experts expect that the one we'll have in the next week is going to be less slightly lighter one than the previous ones. Let's go back to economic calendar and let's look at hmm, FOMC schedule. FOMC schedule. We'll have it on December 14. Fed interest rate decision. FOMC press conference. FOMC economic projections. On this day, we'll have something meaningful result. Anyway, the one we'll have on that day is going to be a bit lighter than the previous ones. Okay. Oh. Elsewhere, shares rose more than 3%. Most observers expect the Fed to raise its rate by another half point when it meets next week, which will be slightly lighter touch than its last four increases of 3/4 of a point. Elsewhere, shares rose more than 3% in Hong Kong as investors access the potential impact of a rollback of many pandemic restrictions on the Chinese mainland. On Wednesday, rules on isolating people with COVID-19 were eased and the virus test requirements were dropped for some public places. A dramatic change to a strategy that had confined millions of people to their homes and sparked protests and demands for President Xi Jinping to resign. Experts warn, however, that the zero COVID restrictions can't be lifted completely until at least mid 2023 because millions of elderly people still must be vaccinated and the healthcare system is strengthened. Hmm. Mm. Many economists expect the US economy to slip into recession in 2023, at least a minor one, and markets have taken a beating this year as a result. So, mm, so we'll slip into a recession in 2023, um, minor one, but we'll see. We'll see how thing goes, and the most important thing is Federal Reserve doesn't have any plan to um, mitigate interest rate hike, and uh next week we'll have another interest rate hike. The point is, the one we'll have is going to be a slightly lighter one than the previous ones. That's what we know so far. We what we don't know how long it's gonna last, but we'll see. Intel is a sleeping giant ready to awaken. Intel is a top US semiconductor maker with its own fabrication plants, actually making its own chips. Okay. Intel is a direct benefactor of the CHIPS Act of 2022. Its Intel Fabrication Services division will contract to produce chips for chip companies in the US and Europe. Intel shares are trading at 15.3 times forward earnings with a 4.86% annual dividend yield, 1.2 times price to book, and 1.74 price sales. Okay, let's look at price level of Intel. Hmm. US semiconductor producer Intel stock is trading at price levels not seen since 2016. Okay. While shares. Mm, okay. While shares rallied after a strong earnings report, the guidance was exceptionally weak, but shares have managed to grind higher despite the warnings. The markets may have finally started to believe in the value of its heavy investment in the future semiconductor fabrication plants. These are extremely costly and take up to 5 years to become fully operational. And since because of its particular characteristic of industry, um, in order for this to become fully operational, it takes up to 5 years. Uh, Intel is uniquely an actual American semiconductor maker, which should carry a premium compared to other semiconductor companies that rely on outsourcing the production of their chips overseas. Mm. Texas Instruments and Global Foundries are the other two owners of fabs in the US. Hmm. Foundry services. Are investors hearing the end of a Spotify's downtrend? Mm. Shares closed higher Wednesday following a decline of more than 4% in Tuesday's session. The stock is down 67% the past year, but it's holding above its November 4 low. Spotify. Mm. You don't. Are investors hearing the end of Spotify's downtrend? Analysts have lowered their price targets on the audio streaming service since October's earnings report, but see the potential for a gain of more than 100% in the next 12 to 18 months. Hmm. Shares of Spotify Technology were rebounding Wednesday after declining 4% Tuesday. The stock's price has held above its November 4th low of $69. Does it mean we've heard the last of its downtrend? Spotify attempted rallying the summer, roughly in tandem with the broader market, but it fizzled in. The stock has been trading generally lower, although it's notched at a 5.78% 1 month gain. The streaming audio service is grabbing headlines this week because it rolled out its annual year-end feature called Spotify Wrapped, which compiles users listenership data for the previous year, categorized by music categories most listened to and other designations. The feature was launched in 2016. Struggled during the pandemic. Okay, underperforming broader market. Advertising revenues up. Um, Moderate buy rating among analysts. Okay. Spotify technology currently has a moderate buy rating among analysts. Starting from 2018 and throughout 2021, its revenue has been growing, but then its price level has been going down. So mm, I think it's a moderate buy as well. Mm, let's read some of paragraphs out loud. Okay. Spotify, which went public in April 2018, in is based in Sweden. After its IPO, it struggled to regain its 2019 highs and fell with the rest of the market in early 2020. But Spotify failed to rally, along with other streaming stocks such as Netflix, mm, which staged the big as the subscribers craved at home entertainment in the early days of the pandemic. Uh, okay, okay, that makes sense. The reason they were struggling during the pandemic is because since Corona, people tend to work at home instead of going to workplace. Um, they just rather stay at home and oh, oh, hold on. Wait. Oh, okay. I feel really shy now. Oh, okay. I was talking about the company named Spotify, and I'm not sure if you've ever heard about Spotify. This company mainly uh, oh, I feel really shy. Okay, but things has to be done. So let's get back to where I left off. So I was talking about Spotify and uh, its potential. Mm. Uh, as far as this article says, Spotify was struggling during Corona period because a lot of people just tend to stay at home and do their work at home. So normally people listen to music on their way to workplace, but since they just stay at home, they don't have much time to listen to music or podcast. So that's one of the reason during Corona period that people use Spotify less. That's the first reason. And second reason here, it says that underperforming broader market, even as the broader market rallied in October and November of this year, Spotify investors continued hearing the sound of a downtrend. Okay. Mm, mm, okay, this paragraph is mainly about mm, like technical viewpoint, not fundamental viewpoint. So let's skip this one and let's go to the paragraph about advertising. But even if they were struggling with Corona, their advertising revenue was up. And let's read some of paragraphs here. Revenue from advertising, an area the company has targeted for growth, increased 19% from the year ago quarter and constituted 13% of total sales. Okay, anyway, their advertising revenue increased 19%. Okay. And constituted a 13% of total sales, which is not a big point, right? 13 is a small number. So Spotify said most of the advertising growth came on the podcasting side of the business. Okay, their main advertising revenue came from podcasting. Okay, year over year, and made up 13% of total revenue. Spotify rolled out podcasts in 2015. Okay, okay, I get it. So they started a podcast service starting from 2015, and since then it's been a main source where they got revenue. Okay. Uh, More recently added audiobooks and has ramped up those offerings quickly. So audiobooks and ramped up those offerings. Yeah, exactly. The problem here is that Spotify is not the only one that offers broadcasting service. We have a lot of competitors. Like uh, I cannot come up with one exactly, but Spotify is not the one, definitely. Hmm. Yeah, here it says, despite seeing room for upside, analysts reduced price targets for the next 12 to 18 months show a degree of dampened enthusiasm that the company has what it takes to generate access returns. So even analysts expect that we won't have that much room upside. Hmm. Okay, some of the experts rated as a moderate buy rating among analysts, but um, I wouldn't consider buying this one. Mm. Okay, next article that we have is Asian shares sleep after tech stocks slump on Wall Street. Mm. Okay, let's get to bottom of this article and see real point of this one. Shares were mostly lower in Asia on Thursday after Wall Street sat under weakness in tech stocks. U.S. futures turned higher and oil prices rebounded more than $1 a barrel. Blah blah blah. Okay, it's not really important one. Mm, or shares. Oh, okay. This one is really interesting article. Why you should avoid Carvana even if it avoids bankruptcy. I myself also invested some of money into Carvana, and since then, it's been going downward ever since I bought this one. Uh, of course, they're facing bankruptcy, but it doesn't mean that they haven't failed it yet. There is still some advantage they have, and we'll have to see how they deal with it. And but in this article, this author mentions some of the reasons why we should not buy Carvana, and the key points here listed are Carvana stock is falling sharply and concerns that the company is headed for bankruptcy. Okay. Because of high interest rates, I know that they are struggling with paying debts, and it's not just and since starting of their business, they weren't able to gain profit. Um, that's also the main problem too. Anyway, the second point here is that the company is facing macroeconomic headwinds as it attempts to reach a profitable scale. Mm, Macroeconomic headwinds, just like what I said, high interest rates. And next week we'll have another interest rates hike. So the situation going is going to get worse anyway. The precarious state of the company's finances leave it with several options, but bankruptcy may be the least bad option. Even if the company avoids bankruptcy, the stocks will be worth just pennies. Mm, Okay, I think this author is a bit negative in terms of buying Corvana. Of course, there are a lot of good points about buying this one, but I think he just focuses on negative points. Financial situation. As of the company's most recent earnings report, opposition by increasing interest expenses and further weighing on profits. The company could also sell more of its stock, but that option is generally seen as a negative by shareholders and may cause further selling activity. However, either option would be preferable to bankruptcy if the company believes the economic outlook will quickly improve. And that gets to the root of the issue. Time isn't on Carvana's side, and that was about Carvana a month ago, and Carvana news soon. Hmm. Anyway, uh, okay, let's go to mollyfood.com and read some of the articles. Down 68%. Hypergrowth software stock looks ready for a comeback. Get ready for next bull market. 3 no-brainer stocks to buy before the end of 2022. Why Axis Technologies rocketed 37.7% higher in November. Salesforce and Viva Systems are set to sever ties. Here's what investors need to know. Okay. Okay, let's read this one first. Oh, GitLab. Okay, now we have the company named GitLab. GitLab is like one of the company and one of the service that I use often when I'm at workplace. And GitHub and GitLab, they're like kind of the same. Let's see what it says about GitLab. GitLab just posted 69% revenue in its latest quarter. The company's attacking a large addressable market with relatively little competition. The stock isn't cheap, but is well priced for its growth potential. Yeah. Uh, Cloud service. GitLab is growing rapidly in a difficult environment. Let's look at price level of GitLab first. Currently, its price level is a 42.78. Its all-time high was 119.05. First target estimate is 68.25. Mm, Full-time employees 1,630. San Francisco, headquartered San Francisco. Since starting from 2020 to 2022, its revenue has been growing, but then uh, ever since it went all the way up to 121.74 in the year 2021, October 14, it has been going down. Okay. Let's read this carefully, okay? Software stocks have gotten slammed this year as a combination of inflated valuations, slowing growth, and fears of a recession have torpedoed the high growth sector. While some cloud stocks have seen growth significantly decelerate, the sell off has created a buying opportunity in others. GitLab looks like one of them. Okay. Cloud stocks, right? The provider of a cloud-based DevOps platform just posted 69% revenue growth to $113 million in its third quarter earnings report, beating analyst estimate at $106 million. While the company is still operating at a loss, its margins are improving, and its adjusted loss per share of $0.10 topped the consensus at $0.15. Wide open growth opportunity. GitLab is penetrating an addressable market estimated to be worth $40 billion, which is nearly 100 times the size of its current run rate revenue of $452 million. And the company faces relatively little competition. What I know is that they're like dominating the market because from what I see, most developers and people who works in IT industry use GitLab, and instead of using GitLab is like for people who works at field. GitHub is mostly likely for people who works alone or do some developing programs casually. But for industrial purpose, they use GitLab, and since they are dominating the market, they are penetrating it. They're penetrating an addressable market, and it's estimated to be worth $40 billion, which is really huge. While its closest competitor is Microsoft GitHub, yeah, uh, there you go. GitLab CFO Brian Robbins said in an early interview with the Motley Fool that in half of the company sales pitches, it doesn't face any direct competition, competing only with in-house tools. GitLab's comprehensive DevSpec OSH platform, which helps organizations develop, deploy, and manage their software and IT, is also an advantageous position as it's replacing individual point solutions. Okay, there's some really good points here. The company says that 85% of organizations use 2 to 10 DevOps tools, and GitLab's platform can replace all of them, saving organizations time and money. Replacing point solutions has also become a trend among software buyers. Gartner estimate that by 2024, 60% of organizations will have switched from multiple point solutions to single delivery platforms, which should support GitLab's growth. Okay, here's a good point. Okay, a lot of organizations use 2 to 10 DevOps platform, but in the near future, people may want to use one platform instead. They don't want to use multiple platforms, and they want to go back and forth and use spend their time and money. Instead, by just using one platform, they can save some time and money and um, work efficiency wise. It's much better. In its DevOps platform also delivers a clear impact for customers. Okay. A GitLab commission study from a Forrester Research said that its platform could produce a return on investment of up to 427% 3 years after deployment. And the company shares some customer stories that show how GitLabs is making them more efficient. Okay. Okay. Um. Okay. So within 3 years, they expect that they could possibly have a return on investment of up to 427%. And after deployment, the company is expected to uh, gain a lot of profit. And that profit also relates to customer stories, which will drive more growth and more potential, more sales. Okay. Airbus just said it's able to release new features 144 times faster with GitLab. Mm. Airbus said it's able to release new features 144 times faster with GitLab's Swiss bank UBS was able to replace 50 different development tool chains with GitLab's platforms and now has more than 18,000 employees using GitLab. Okay. The company tends to grow through a land and expand model, starting out small by selling to just developers before expanding more broadly in an organization. Along the way, customers tend to ramp up from the premier tier, which costs $19 a month, to the ultimate tier, which costs $99 a month. And the company said the ultimate tier is growing faster than 100%. Okay. Okay. So starting out small, developers pay $19 a month, and before expanding more broadly in an organization, it can possibly expand it to $99 a month. Is GitLab a buy? So GitLab stock has fallen sharply over last year, but the stock still isn't cheap. Currently trading at a price sales ratio of 16. Yeah, while the macro environment has introduced some uncertainty for GitLab, it's shown more resistance to those headwinds than many of its peers, and the break-even FCF guidance is a sign the company is confident it can manage through the volatility. So, although we have macroeconomic headwinds recently with Corona, interest rate hike, and supply chain issues, but GitLab, the service they offer is resistant to the headwinds that we face these days. So it's worth buying it. The stock down roughly 2/3 from its peak last year, and a wide open growth opportunity in front of it that is quickly capturing the risk and reward calculus looks favorable in GitLab's stock right now. Okay. Okay, let's take a note. GitLab. Next one we have Etsy. Continues to grow gross merchandise sales and new buyers even in a tough market. ETSY. Let's look at price level. Okay, we have Etsy here, and its price level is 130. And let's look at financials report. Annual report here it says its revenue has been growing steadily starting from 2018 and at the year end of 2021 revenue has been growing steadily. And on the year 2018 its price level was about 9.82. Oh, okay. Growth could truly take off at those solid companies during a bull market. Okay, let's read this one. I myself also invested some of money into Etsy, and it's really important to know what this company is doing, right? Etsy's business soared during the early days of the pandemic. People favored online shopping, so the e-commerce platform for handmade goods became popular go-to place for face masks, gifts, and other items. Momentum has slowed since then. Importantly, Etsy kept most of the gains it made during the past couple of years. Etsy Marketplace gross merchandise sales totaled $2.6 billion in the third quarter, compared to $1 billion in the third quarter of 2019. Hmm, okay. Hmm, the company is also adding more new buyers than it did 3 years ago. In the recent quarter, 6 million new buyers shopped on Etsy. That's 50% higher than the average in the quarters before the pandemic. Okay. Etsy has made progress that wasn't just temporary, it's lasting and should boost growth and share price once today's economic pressures ease. Hmm. Today, Etsy trades for 33 times for earnings estimate. That's down from more than 60 earlier this year. At this price and considering Etsy's growth in a difficult economic environment, the stock is a no-brainer buy. We have another company named Lululemon, and Tesla. Hmm. Okay, Lululemon. Let's look at price level of this one too. Lululemon. I don't know much about this company, but I don't know much about this company, but it sure does have good stock price level. Hmm. It's outperforming the market this year. The maker of yoga inspired clothing. Okay. Reported double digit growth in total revenue. Same store sales. And this the revenue in the most recent quarter. Okay. It can perform even during tough economic times. And Lululemon's Power of Three growth plan was so successful that the company now launched a second plan. Men's line revenue double digit revenue and quadruple international revenue. I don't know much about this company, so I'll have to look at this one. But it looks like they gain a lot of profit from selling yoga inspired clothing, not only for women but also for men and internationally. Uh, I'll have to see. Since I'm not really interested in clothing, I'll just have to see. Mm. And the last article that I'm going to read is uh hold on. Okay, hold on. One article about Datadog. Mm, one article about PayPal. Mm, PayPal Holdings. Okay, and Salesforce and Viva Systems. Mm, Viva Systems said it will not renew its long-term relationship with Salesforce in 2025. Meanwhile, Salesforce has also been losing a number of executives. It's been a tough year for cloud stocks, and both companies are likely feeling pressure to cut costs. Salesforce and Viva Systems. Hmm. Salesforce is a customer relationship management service, and from my experience, Salesforce, a lot of organizations use Salesforce, and but I think they're struggling with macroeconomic headwinds because they just broke the relationship between Viva Systems and Salesforce seems to be broken. Yeah, here it says a planned break from a long-term partner. Mm, uh, Okay, Salesforce losing more than just infrastructure revenue. While Viva Systems migrating CRM customers off of Salesforce in 2025, Salesforce will lose out on that revenue stream. However, losing Viva may not amount to much after all. Salesforce out in 2000, $30.3 billion in revenue over the last 12 months. Okay. It's been a tough year for cloud stocks, Viva Systems, Salesforce included, but the long-term thesis for investing in them remains intact. For now, I'm not planning on making any changes based on the pending breakup between Viva and Salesforce. So, respectively, um, each companies are has its potential. Although they are planning to break their relationship, they break their partnership. Each company itself themselves have potential, and since they are providing cloud service, their future is bright. Mm. Okay. Anyway, uh, let's read this one, and then I'm done with YouTube Live tonight. Okay. Mm. The last article that I'm going to read is about Datadog. Mm. A guard dog for your critical systems. The digital transformation continues to gain steam, with more businesses adopting cloud computing than ever before. The strategic importance of keeping customers facing systems up and running can't be overstated. Simply put, if customers can't reach you, they can't spend money. That's where Datadog comes in. The company provides a single dashboard that monitors a variety of systems, notifying developers of a problem before it reaches critical mass. The system also provides early warning by detecting anomalies that could result in future problems. So, for me, I'd be thinking that it's really useful because while I'm doing some programming, I could actually get to know the problem in advance, right? Because here it says they provide a single dashboard that monitors a variety of systems and notifying developers of a problem, right? Hmm. Before it reaches a critical mass, okay? And also, before it could result in future problems, they notify you in advance, so people may find it really useful. Hmm. And fortunately, they tumbled 62% over the past year. And its current price level is 68. 68. But a quick check of the financial results shows a business that continues to prosper. And ever since it started its service in 2018, its revenue has been growing exponentially. And in the year 2021, its revenue is $1.3 billion, earnings 20.75 million minus, but okay, 2018. Okay. Anyway, okay. Datadog generated revenue that grew 61% year over year. At the same time, its adjusted earnings per share surged 77%. The company also boasts both operating and free cash flow, which was sustained during the ongoing downturn. Huh. Uh, okay. Bank of America analyst Koji Ikeda is much more optimistic than his Wall Street peers, assigning a price target of $135 and a buy rating on the shares. He cites the company's best-in-breed portfolio of 15 products as the reason for enthusiasm. If his research is on mock, the stock could surge 111% by this time next year, enriching shareholders along the way. Okay, most of Wall Street's finance are pretty upbeat on the company, which has a consensus 12-month price target that's 58% higher than today's stock price. Okay, anyway, this is it for today, and I'm gonna see you tomorrow. Okay, bye bye. Bye, Uni.